Hello, everyone. My name is Robin Dolezal. Today is Thursday, January 14th. With me today, as always, is Dan Nentel and Alex Pars. Together, we are with Ironwood Financial. Happy New Year, gentlemen.
Happy New Year.
Hey there, guys.
Hope you guys are having a great week.
Actually, I was just thinking just now, there was a day this week, I think it was Tuesday or Wednesday, where we were all in the office. Alex and I actually had a face-to-face meeting. However, we did the meeting in the lobby with masks on and separated, but it kind of felt normal for a day. And then today I walk in and I'm the only one here. It's dark.
We are slowly getting back to normal, though, Dan. I trust me.
So.
Yep.
All right. Well, did you guys have a good holiday? I assume it was not quite as the same year past, but I hope it was good.
Yeah, it was nice.
Yeah, we had a white Christmas up in northern Minnesota, so it was good.
Good. All right. Well, let's get started. This is the first one of the year, and every once in a while we start with a funny story. I think obviously it's prudent that we start the new year off with a nice funny story. Dan, tell us the story that we were just talking about Bitcoin.
Well, and I don't know if it's funny, especially if you're this individual, but I've never really thought about this because we get a lot of conversations about Bitcoin and, obviously with President-elect Biden talking about a new stimulus plan and there's worry about inflation, Bitcoin's kind of a anti-dollar play. And I always wondered, if you buy a Bitcoin, how do you store it? And there was an article today that I was reading that you actually have to buy a virtual wallet to hold your virtual coin, which I think is kind of funny. And that way nobody can steal this imaginary coin that you have. And the virtual wallets are a mechanism where it's designed for complete privacy. So you store your coin in your virtual wallet and then you have a password. And nobody knows your password and you're supposed to keep it somewhere safe. But if you get your password wrong, that's 1 of 10 times. And if you get your password wrong 10 times, it literally locks up for the rest of time and you never can access your coins and nobody can help you because the level of Bitcoin's privacy. And there was an article about a gentleman in San Francisco who has now, because he bought it 10 years ago when Bitcoin first started, the value of his coins are $220 million. And he has missed on his password 8 times out of 10. And so in the article, they were talking about how he lays awake at night thinking about what his possible password can be, but he doesn't want to enter one because if it's wrong and he does it twice, he's effectively lost $220 million.
Oh, that's awful. It's amazing because you think when these people build these websites, like one of the first things you put in there is the reset password tab.
The funny thing is, so I don't know if you've noticed, but there's a lot of articles about Mega Millions and Powerball both being around the $600 million mark. So if you take the lump sum option, taxes, all that, you're probably right at around the same 220 million or so that this guy's got potentially coming to him if he can just guess the right numbers like everyone else.
Funny.
Oh my gosh, the stress involved in that. Oh my God. All right. Okay, so we're 14 days in. I mean, it seems like the market is relatively happy so far.
Yeah. It's been a good year and it's really so far, not at all unexpected. We've got a promise of lots of stimulus. We've got the Fed continuing with their easy money policies. Some good news we came out on Wednesday is the consumer price index came in at something like 0.1 for December, which means there's essentially no inflation still. So even with all the printing we did last year and all the money that's flowing around, there's plenty of room to do more stimulus and to do more quantitative easing if they need to. And the market's reacting positively to that.
Yeah, but to be clear, we are expecting inflation though still, right?
No, the Fed is trying to target inflation.
Yeah.
And so far they haven't been successful. So maybe if we print enough, we'll get some inflation, but so far it's not happening. And we printed a record amount of money last year.
Yeah, right. So we've got earnings coming out tomorrow, Dan, but you don't think that's actually going to matter much looking at the last quarter, right?
No, I was actually listening to the quarterly report from the San Francisco Fed chairperson, Mary Daly, and the earnings that we're going to get are effectively what was going through as the COVID was spiking a second time. You know, we don't anticipate the numbers being really relevant. It's kind of like, you know, when we were locked down in March, it's like, oh my goodness, restaurants aren't doing very well. Well, of course not. They were closed, you know, so same situation. The forward guidance I was reading from Goldman today, they're actually quite optimistic. I was reading the ISM reports, you know, for supply management, and we're seeing record amounts of, you know, the corporate purchasers are buying more products because they anticipate that we will come out of this COVID lockdown or the most recent spike. Vaccines are going to work. So it's interesting. I was reading another article that said they have so much supply on hand, and I actually firsthand experienced this, that if you buy something and you want to return it, you're getting sent a letter saying, you know what, just keep it and we'll give you a bigger discount, or in fact, we'll give it to you for free. My sister bought my son Henry a Vikings jersey for their new rookie sensation. And she said, oh, it's too big, let me return it. And they sent her an email back saying, how about you just resell it and we'll just send you some money back. I mean, so people are really getting the economy ready for what they consider to be a robust recovery, but probably not till Q3, starting in July.
Gotcha. Okay. And so Alex, talk to us. We've got new unemployment numbers, correct?
We do. And once again, it was actually, I think, the highest they've been in about 5 months.
Yep.
So obviously not a good thing for those people who are having, you know, trouble getting a job or losing their jobs. And of course, that's because of the spikes we're seeing in, you know, across the country in COVID numbers and a little more strenuous lockdowns. That being said, though, the market likes it. Why? Because it just adds more fuel to the fire for more stimulus and more need for government money. And the market loves their government money.
Mm-hmm.
So,
well, in fact, it didn't, I've heard a number anywhere between 1 and 3 trillion that President-elect Biden has effectively promised to announce during his inauguration. So obviously the market's going to be excited about that. And one of the conversations that we get quite a bit is, well, don't we have to pay that back? Is the dollar going to fail? I mean, there's a lot of questions. And it's interesting, that Fed conversation, they're not worried about hyperinflation at all.
right.
They figure Q3 we might get a spike up to maybe 2.25%, and then the average for the year they're still hoping to get at 2%, which will be good for banks, might be good for a CD eventually, but really right now we're just trying to get the economy back to work.
And remember, their target, they said, is now 3%. So I don't think they're going to even reach their target this year.
Oh, and I think that was 2023, Alex. I think she just said that the target this year is 2.
For inflation? Okay.
Yep.
So,
Well, and then what, kind of looking at that, not even every quarter anymore, but kind of looking at that as a benchmark every year or so.
Yep, as an average is what she said.
Yeah.
But we have to realize, I mean, one of the emphasis that she was making in the, again, I keep referencing because I thought it was a fascinating conversation, but she kept mentioning that this is a much bigger economic hole that we need to climb out of than people are giving it credit, because people look at the stock market and say, oh, we're fixed. And Alex, I'd like you to reference this a little bit more, but I mean, 2020, the year of 2020 was a very unique phenomenon with the broken economy and et cetera. And we saw the market do some good things in a few sectors. I mean, many sectors were very much so hurt. But if I heard you yesterday in our meeting, you kind of anticipate that the market will continue in its current kind of a momentum trade for another few months, and then actually maybe get back to fundamentals like we all hope maybe second half of the year. Is that still your outlook?
yeah, basically what's happening is the day traders have taken over a significant portion of the market. And those are people who, you know, they're sitting at home, they're bored, and they decided to play with stocks. And the funny thing is they've basically not been hurt. A great example came up last week, which was when Elon Musk went out and tweeted, use Signal. Okay, now maybe he's telling people to use their turn signal, but apparently not. It's a different messaging app as opposed to Twitter or Facebook or something like that. Use Signal. So what ends up happening on Thursday and Friday is people went out and poured money into a stock named Signal. And I think it went up something like 500%. By Friday. And then on Friday, it was revealed that this was the wrong company, nothing to do with Signal Messaging, which is a privately held company. So what do you think happened on Monday?
Had to be a massive sell-off.
Yeah, I mean, it's the wrong company. Why would, and we just put all our money into this. Oh my gosh, what a terrible thing. So on Monday, the stock went up by 900%. Why? Because people are paying that little attention to what they're buying with their money when they're investing in the stock market. So it's just totally bonkers right now. And the fun thing is, those people who bought the wrong stock on Thursday and Friday still made out like bandits, even though they made a horrific mistake. And we're continuing to see that. Basically, if you remember back at the beginning of 1999, which is a long time ago now, you couldn't lose, right? So you were buying, first it was big tech companies, and then it was IPOs, and then it moved into penny stocks and things that had no basis or value whatsoever. And that's the direction we're starting to see. So far in 2021, the best performers have been microcap stocks that essentially have no proven value proposition. And so the reason people are doing that is, hey, you put your money into some big tech company that's doing well, and maybe you can make 5 or 10% if you're lucky. Well, you might be able to make 500% in a day if you pick the right tiny company no one's ever heard of.
Mm-hmm. Yeah.
So it's this, it's once again the irrational exuberance, this greed cycle where we went from big to medium to small to completely unknown. I'm hoping to strike it rich overnight. And I would expect that to continue for the next few months until the vaccine rollout comes, more front and center, the virus numbers go back down, people start going back to work, going out and playing, at which point I expect that to people to start taking a bath here and there on that stuff. Mm-hmm. And that should die off somewhat. And then we'll be back to where earnings make a difference, profitability makes a difference. And we're really trying to position ourselves for that shift, which we anticipate to happen mid-year maybe.
Well, and I tell you what, Ironwood as a philosophy has been very much so buying really since the second half of 2020, going back to work stocks. And when the vaccine was announced on November 7th, every one of our portfolios really did well because people realized, wow, we may be able to fly again or travel again or go on a cruise ship. And that was buying based on fundamentals because they were so underpriced. It's going to be interesting to see if there is a correction in the big tech world where we can find that to be attractive again. Because it is, every article you talk about is referencing 1999, just like you did. And we really haven't talked about it, but the big tech is quite overvalued. You may recall in 1999, they were saying throw out the old rules of PE ratios because technology doesn't live by the same rules. Well, sure enough, we saw in 2000 when that 57% correction in the big tech world that didn't really recover until 2018, as far as the NASDAQ getting to its all-time high.
I want to say the NASDAQ dropped 75% back in.
I think it might have been closer to 90, actually. Yeah. The S&P fell 57, but
yeah.
And what you saw there was interesting because all the mutual funds cheated to get into big tech. And so too many hands were in the cookie jar. And now I thought this was really interesting. We had a client ask us if we should they wanted to buy some S&P 500 because it's, the old stodgy. And reality is, if you look at the S&P, it's morphed into 5 companies, and the rest of it is such a small portion comparatively of the big tech companies running the world. And so I thought to myself, well, maybe we should be looking at broader markets like the S&P 1500 or the Wilshire 5000. And if you look at those, the biggest holdings are still the same names. So it's difficult to diversify right now out of those big tech companies.
You can do it. You just have to be careful and look really at the holdings. So, and again, I wouldn't be at all surprised if they continue their run up for the next several months. Okay. I think didn't you tell me yesterday there was some stock you were looking at where there was something like 1 billion shares traded and the average transaction was $100?
Yeah, well, that's the Robinhood phenomenon, that small trading. You can open an account for $100 and buy 10 different stocks, even though you don't have enough to buy one share of anything. What's interesting is last week I actually got onto Twitter again because Twitter is now where these Robinhood traders are getting their stock tips. And I wanted to see what the chat was all about. And every Friday there's this company who tweets out the 10 most popular stocks traded on Robinhood. I had heard of Tesla, and most of the companies I had never heard of. And there was this one company, NIO, which is the Tesla of China. It's a electric car manufacturer. It has gone from $4 to $52. Yet the company loses a little over $1 billion a year. They've made 96,000 cars ever, and their market cap is bigger than GM. And it was the #1 traded stock in Robinhood. And so, like, how does that survive anyway?
Well, that is very similar to Tesla.
That's true.
So,
Well,
all right. So so it sounds like we're optimistic about the market. It sounds like, politically what's going on, with stimulus coming in the next few months. To what degree, we don't know, right? I mean, obviously, Dan, you mentioned it was somewhere between $1 and $3 trillion, which is a lot of money hitting the economy. And what else we've got? So employment numbers, we're not necessarily, I mean, they're still going to be there, and hopefully they go down. But either way, we're going to get some stimulus out of it, which the market and the economy will like, and hopefully fundamentals come into play.
Yep. The only thing I would like to, the last thing for me is, I've gotten this question quite a bit. We actually had to leave our normal, fundamental world in 2020, like everyone did. And we started diving more into sectors that were very much so discounted, like travel and leisure or energy companies, et cetera. And our portfolios look a little different than they have in the past. And I've had a few questions saying, are we going to get back to normal? And the answer is yes, we will actually morph back into more fundamentals. But again, like Alex said, probably not till the second half of this year. So portfolios are going to look a little different for another 6 months. And then hopefully in the most tax efficient manner, we can get back to fundamentals, but it'll be a while. And we'll talk about that in reviews when we meet with everyone.
All right. Well, Alex, if you get any last minute items, folks, if you've missed any of our other discussions or videos, you can of course find them on our Facebook page or website, which is ironwoodfinancial.com. This was not a live video, but if you did have a question about what we talked about today or just in general, please don't hesitate to contact us. And if you are watching this, you are not a client who would like to get in touch with us, you can find us at ironwoodfinancial.com, or you can reach us toll free at 888-271-4646. Guys, I hope you have a great long weekend. Any special plans, or are we just huddling in?
try to stay warm, right?
That's right.
I actually, my brother's in town, and my brother and I are going to play golf Saturday. So
good for you.
We'll have fun.
Yeah, good. All right, guys. Well, I will see you very shortly. And until next time, be safe, be healthy, and we'll talk soon.